US stocks closed modestly higher, recovering some ground after recording their worst week for 2023. Key indices on track to end February with losses. Investors now await major retail earnings this week, even as concerns over stubbornly high inflation keeps the street on edge. Stocks in the Asia-Pacific open higher. Japan reports its steepest decline in factory output in 8 months. The SGX Nifty suggests a flat start for the Indian market. Oil prices dip overnight as strong economic data fuels expectations of more interest rate hikes and demand concerns. Hopes of likely lower supply due to Russia halting exports, however, limit the fall. Brent crude trades around $82 per barrel. And a CNBC-TV18 poll sees GDP growth for the third quarter at 4.7% versus 5.4% last quarter. The services sector, made up of trade, hotels and transport, is likely to drive growth. Zee Entertainment to be included into the futures and options segment, says NSE, as the company will move out of the IBC framework following recent NCLAT order. F&O contracts at Zee Entertainment for May 2023 will now be available. JP Morgan's investment arm offloads ESG funds of the Adani Group stocks. Reports suggest a JP Morgan Global Emerging Markets Fund has sold 70,000 shares in ACC a month after the Hindenburg report surfaced. Hi guys, a very good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we're looking at as we get into this new day. There's clearly lots going on and lots for us to catch you up with. But first up, a look at the global markets. It is at least starting in the green today. We did get a little bit of a positive handover from Wall Street. So you have all of the Asian markets actually which are trading in the green today. The gains this morning are led by the Korean Kospi market. So that one is up over 1%. You have Hang Seng on your screen. That one is doing quite well as well. It is a 0.9% gain. If you take a look at the Nikkei markets, up over 100 points over there. So that one also holding up well, around 0.5% higher. Whether you look at Straits, Shanghai, both of those also seeing gains between 0.25% to 0.5%. The Taiwanese markets, remember, are shut again. It was shut yesterday, and once again it is shut for trade today. The SGX Nifty is up on your screen, very, very flat right now, just around 10 points in the green for the SGX Nifty. But that's what's going on across Asia. Let's also talk about the US markets now. Wall Street ended Monday's trading session modestly higher, so both the Dow and the Nasdaq Composite closed around 70 points in the green. The S&P 500 also ended with around a 12-point gain. But remember, these gains follow what has been the worst week, right, for the US equities last year. We saw cuts of around 3% in the frontline index last week. So this is coming after that kind of a showing. CNBC's Seema Modi is standing by to bring us up to speed with all of the action that transpired on Wall Street.
Markets closing out the day higher across the board as stocks try to rebound from their worst week of 2023. The Dow finishing up 0.25%, S&P 500 ending the day with gains of 0.3%, and the Nasdaq rising over 0.5%. We did see a sharp drop in mortgage interest rates that brought home buyers out in force last month. Signed contracts of existing homes jumped 8.1% in January compared with a month before. But the gains may be short-lived as rates are bouncing higher again. Snapchat is rolling out an open AI-powered chat bot to its Snapchat Plus subscribers. The bot is based on similar technology that runs Microsoft's Bing AI. And users, Snap says it will be able to recommend gift ideas, weekend plans, or recipes. And Ford is extending the production pause on its electric F-150 lighting by another week. A battery issue resulted in a pickup truck catching fire earlier this month. That's the action here in the U.S. Back to you in Mumbai.
All right, Seema, thanks a lot for bringing us all of that action from the U.S. markets. But in fact, staying with Wall Street, here's some important opinion coming in from Jefferies' David Zervos, as well as JP Morgan Asset Management's Meera Pandit on the Federal Reserve's next move. So listen into that.
I'm not sure that we have to retest the lows that we saw in October, but we'd still be a little bit cautious from here. And here's why. If we think about where we came into the year, markets were pricing a terminal rate of the federal funds rate at about 4.9%. Today, they are pricing 5.4%. And yet we haven't seen a huge sell-off associated with that repricing. So I'm a little bit nervous around the fact that the market is still up. The journey we've been on is from 0% rates to 4.6% rates here. The Fed is moving from power to finesse. So what we're seeing incrementally here is the fine-tuning, and therefore I think the market also trades in a bit of a tighter range, which is why I don't think we have to go back to 3,500. But at the same time, right now where we are feels a little bit too optimistic.
This idea that there's rate cuts coming in 2024 or late 2023, probably a really silly idea. Maybe we have to go up a little bit higher, another 25 to 50 bips. Not, I think, 100 or 150 bips, but the whole distribution to me has shifted when you start to think about this difference in the loss structure. And it was, for me, a pretty big revelation because I was sort of done with rate hikes really toward the end of the year and feeling pretty confident that we were just going to sit for a while. Now I think we might have to fine tune it a little more aggressively to the upside. And if anything, there's a fatter tail to even much higher rates.
All right, that is some important opinion coming in. But with that, let me also bring you some more that we are tracking from the global setup this morning. That is that European markets ended Monday's trading session sharply higher. This after posting its steepest decline for the year. So the French CAC index surged over 1.5%. The German DAX gained 1% at the close as well. And the British FTSE index also closed around 56 points in the green. Some more that we're tracking from the region. The sterling surged against the US dollar. This after British Prime Minister Rishi Sunak signed a new deal with the European Union to end a long-running dispute over the post-Brexit Northern Ireland Protocol. So this agreement will now pave the way for a new green trading lane and does away with all of the trade restrictions which earlier existed between the UK and Northern Ireland. Sunak has described the latest agreement, which is known as the Windsor Framework, as the beginning of a new chapter between the EU and the UK. So that's important to track from the region. And in some important macro cues from Europe, this week we are expecting preliminary inflation data from France and Spain. That's due for release today. From Germany on Wednesday, and then the Eurozone goes on Thursday. So there's lots going to come out of the Eurozone in terms of macro data. We will, of course, bring you up to speed with all of that as and when we do get it. But that's what we're tracking in terms of global market action right now. Let's talk about how all of these overnight cues really impact our own markets and what we need to track as we get into this trading session. Our research team is here with the trade setup. Nigel, Sonal and Surbhi all join me now. Guys, a very good morning to all of you. Sonal, coming to you first. We were just discussing the global setup. Well, at least there's a minor green tick right now.
Yes, I've got the color right today. So yes, there is some green tick across global markets, especially in US, because we did see a sharp fall last week itself. So most of the US markets, they closed higher. The gains were anywhere between 0.3% to 0.6%, led by the outperformance that we've seen on NASDAQ as well. Bond yields cooled down, and that is one of the reasons why these markets also surged higher as far as the US markets are concerned. If we talk about the Asian markets, largely higher today. Hang Seng is up 0.9%. The Taiwanese markets are shut again for a holiday. Even Nikkei is higher in trade today, and this despite the fact that their factory production data, Japanese factory output, it was down 4.6%, which was the worst decline that this region saw in 8 months. Despite that, if we look at the SGX Nifty, because we have seen strong cues from global markets, it's absolutely flat. 0.05% is what we are seeing as SGX Nifty moves on the higher side. For our own markets, well, yesterday we did see a sharp fall at the start, but there was a recovery. There was a strong recovery from day's low led by the banking names yesterday. Bank Nifty closed in the green, and Nifty closed at that 17,400 mark. So looked like there was some recovery. Now the crucial support for the Nifty is at 200-day moving average, which is at 17,368. And if we look at Nifty Bank low, which is at 39,745, that is crucial support for that particular index in the near term as well. All eyes also on the IT index because NASDAQ surged in trade yesterday. So we'll be watching out for that counter as well. Looks like it could be, as per SGX Nifty, could be a green to a positive start. It could be a flat to a positive start today.
All right, maybe a little bit of a positive start. So let's see how the session moves from there. Sonal, thanks for that. But let's also talk about the individual names that could be in focus in today's trading session. Surbhi is standing by with that entire list. Hi, Surbhi.
Hi, morning. Thanks for that. Few stocks on my radar this morning. Zee Entertainment continues to be in focus as it will move out of the IBC framework and surveillance actions will be reverted. FNO contracts for May 2023 will now be available. Next is NHPC, where the cabinet approves a 2880 megawatt multi-purpose project in Arunachal Pradesh for 1600 crores of capex. Mastech, the company announced a strategic partnership with Netel to bring AI-led digital transformations to the retail and the consumer industry. Next is Wipro, where it announced 4 strategic global businesses lines to deepen alignment with client priorities. Mahindra Logistics, the company's CFO Yogesh Patil resigns with effect from 11th March. And lastly, Lakshmi Organics, where the company appoints Rajan Venkatesh as MD and CEO.
All right, Surbhi, thanks a lot for taking us through that entire list of stocks. Finally, I'm going to hand it over to Nigel, who's looking at all of the cues from the futures and options space this morning. Hi, Nigel.
Well, morning, Pavitra. Yesterday we saw a good bounce on the Nifty Bank in particular, and there was clearly short covering that did play out there because the Nifty Bank ended higher, took support at around the 39,745, which incidentally is the 10% correction from the peak. And then, in fact, we did see a bounce that played out. But what did the FIs do? Well, they continued adding shorts. So they added close to 9,000 short contracts, and that takes the short positioning to around 83%. It appears they were shorting the Nifty Bank because the open interest out there was up by close to around 5%. And as we told you, there appears a bit of a short covering bounce that played out on the Nifty Bank itself. So the Nifty is what they were shorting. On the index option side, well, they were buying calls as well as puts. So no big data point coming out of there. But for me, what is encouraging is they were writing puts yesterday. And after a while, we saw more puts getting written than calls in a ratio of roughly around 3:1. So I like that data point. The other factor is the Nifty PCR has moved back to around 0.72 odd. But at around 0.65, 0.7, we've seen a bit of a bounce that does play out. On the Nifty, it appears there's a short straddle that's playing out. What is that? The 17,400 call as well as puts. You write both of them, you pocket close to around 150, 160 rupees odd, and you hope that the Nifty moves in this band of around 17,250 to around 17,550. That's basically adding 150 to 17,400 on the up as well as the downside. The Nifty Bank as well, there appears there was some put writing out there. So the 40,000 put saw open interest up of close to around 4 lakh shares odd. That's a 10% uptake out there, and that's the strike which has the highest open interest. So the bulls will be counting on that level holding out. Yesterday's low as well, that 39,800 odd becomes very, very important. So SGX Nifty is now indicating a bit of a flattish start. The ingredients are in place. If today you have to see a bit of a relief rally, I think today is the day, going by the global cues as well as the trade setup. So let's see whether or not that plays out.
All right, let's see whether or not that plays out. Nigel, thanks a lot for that. We do have to get into a short break on that note. But on the other side, the key macro data to track is that the Q3 GDP numbers will be announced later today. Stay tuned. We're going to bring you a preview on the other side. Hey guys, welcome back. You're still tuned into Power Breakfast, and let's bring you some important domestic macro cues. Q3 GDP will be released today. This is for the October to December period, and a CNBC-TV18 poll sees this growing by 4.7%. So Lata is here to break down the numbers for us. Lata, what should we expect this time?
That's right. Our poll says 4.7% for the third quarter. That will compare with 5.4% in the previous third quarter. Now, the RBI's estimate was 4.4. So at 4.7, we should be doing better than what even RBI estimated. Now, the big question will be 4.7. Aren't we used to a 6 to 7% growth? Is this weak? No. Actually, 4.7 is a very good number because the previous year's Q3 was very strong. We were coming out of a Delta wave and therefore consumption was strong. Likewise, in 2020 as well, we were coming out of a severe lockdown. So Q3 was very strong. On these strong bases, 4.7 is a good number. As well, if we do 4.7, then we would reach about 40 lakh crore. That will be about a 4.8% growth from Q2. That's strong sequential momentum. So we should be happy about the 4.7% number if we get it. The other point to note is what will be the internal drivers, services. There's a category called trade, hotels, transport, communication and broadcasting. That is expected to grow by 11.2%, and that should grow because the previous 2 quarters, again, services were severely impacted. So this is a rebound and that will do well. The other 2 sectors that will do well will be construction and electricity, gas, all the utilities. That's expected to grow 7 to 8%. What's weak, what will drag will be manufacturing and mining. Manufacturing minus 2 to 2.2%. That's because of course, high global commodity prices, weak export demand. So that'll be the soft part. Now comes the wild card. All our numbers can go wrong. Why? Because the NSO is going to revise 3 of the previous year's numbers. We are going to get the first revised estimate of FY22, the second revised estimate of FY21, and the third and final revised estimate of FY20. So 3 previous quarters are going to be revised. Once the base changes, you never know what the current rate of growth is going to be. It will take a long while for us to know whether the number is good or bad if the base changes dramatically.
Hey guys, welcome back. You're still tuned into Power Breakfast. Let's talk about the commodities space as promised. Manisha joins us with an update. Manisha, good morning. Once again, there's been a big move in the crude prices.
Well, yes, a percentage point of a decline overnight, and it continues to be volatile and choppy. On one side, you have concerns over recession-driven demand, and the other side, the tight global supplies is something that continues to support crude prices in sense of buying as well. But, the whole fact that you could be looking at another aggressive rate hike from U.S. has weighed on across commodity as a sector. So not just crude oil prices, you have seen coal prices now fall to the lowest in last 1 year. Iron ore prices have eased from its 8-month highs. They are trading below $130 a ton right now. Even the rubber prices have extended a downtrend and are trading near 2-month lows. Nickel is trading at 3-month lows. Aluminum prices have come off their 7-month highs. Platinum now is trading at a 4-month lows. So all the gains that we saw in commodities for the month of January have all come off in the month of Feb, and it seems like that March is going to start on a weaker note until another U.S. Fed meeting is off or done by. Until then, it's expected that you could be looking at further declines in many of these.
All right, Manisha, thanks a lot for bringing us that quick roundup of what's going on in the commodity space. But with that, let's also bring you up to speed with what's happening in the latest. After Delhi Deputy Chief Minister Manish Sisodia was arrested over an alleged excise policy scam, the Aam Aadmi Party leader was remanded to CBI custody until the 4th of March. His party leaders took to the streets in several states demanding his release. Remember, these demonstrations were not limited to areas near BJP offices in Delhi. The party workers protested in cities like Bhopal and Chandigarh as well. And several protesting party workers were arrested. Opposition leaders, including the Telangana Chief Minister, have condemned Sisodia's arrest, while his lawyer said he was a political victim and that this case would not stand in court. So that is an important update that we did want to bring you. But with that, we're completely out of time on this edition of Power Breakfast. We leave you with the news that all of the Asian markets are in the green, so that is looking quite positive. The SGX Nifty is absolutely flat, just around 5 points higher as we speak. Thanks for tuning in. Bazaar Morning Call is up in 2.